About 45 million Americans claim itemized deductions on their tax returns. That's about a third of all U.S. tax returns. Now, most people focus on the best-known deductions, such as mortgage interest, state income tax, or charitable donations. Well, there are several deductions that are often overlooked. See if any of these might apply to you. Number 1, state income tax paid for a prior year. If you paid state income tax for a prior year in 2014, don't forget to include it as an itemized deduction on Schedule A. Number 2, student loan interest. If you paid interest on a student loan in 2014, you can claim a tax deduction of up to $2,500 as long as you're liable for the loan and not claimed as a dependent on someone else's tax return. Number 3, moving expenses. If you moved for a new job, any out-of-pocket expenses you incurred can be claimed as an adjustment to income. However, your new work location must be at least 50 miles away from your old home. Number 4, self-employment tax. If you're self-employed, you have to pay FICA tax as both the employee and the employer. This means you'll owe over 15% on the net profit that you report. That's double the amount an employed worker would owe. But the good news is you can claim 50% of this tax as an adjustment to income, reducing your income tax bill. Number 5, educator expenses. Teachers who've paid for classroom supplies out of their own pocket can claim up to $250 of them as a tax deduction. If you spent more than $250, that cost can be deducted as an employee business expense, which is a miscellaneous itemized deduction that allows you to claim expenses that exceed 2% of your adjusted gross income. And number 6, self-employed health insurance. If you're self-employed and pay the premiums for medical, dental, and even qualifying long-term care insurance for you and your family, then you can claim these costs. This is available even if you don't itemize deductions or if your other deductions are limited.